Welcome to Level 3 Lesson 6. My name is RIA the Trader from TradingWing.net. In this lesson, you will learn about the various candlestick patterns that you will encounter through your day-to-day trading. In the last lesson, we talked about trend patterns. These are great for identifying bullishness or bearishness. Candlestick patterns, on the other hand, are great for identifying a change in direction. So let's get started. The first two types of candlestick patterns are known as the hammer and the inverse hammer. When the stock price is experiencing a move downwards, you may come across either one of these patterns. This is an indication of a possible change in direction. If the direction is downwards and you see a hammer or inverse hammer, that is an indication that we may possibly reverse upwards. The reason they are named a hammer or inverse hammer is because they are quite literally shaped like a hammer. On the other side of the spectrum are the two candlestick patterns known as the hanging man and the shooting star. The hanging man is simply a hammer. The shooting star is simply an inverse hammer. The difference here is that the price is moving up and indicating a change in direction downwards, rather than the price moving down and indicating a direction change upwards. That is the main difference here. So the hanging man and shooting star are both red candles, whereas the hammer and inverse hammer are green candles. This is where things get a little bit complicated. The next two types of candlestick patterns are known as the morning star and the evening star. Think of the morning star as the sun rising, and think of the evening star as the sun setting or falling. Think of the sun rising as the price rising, and think of the sun setting or falling as the price falling. A morning star is identified by a red candle, followed by a smaller red candle, followed by a large green candle. This indicates a direction change upwards. The evening star, on the other hand, begins with a large green candle, followed by a small green candle, followed by a large red candle. This indicates a direction change downwards. Make sense? The next two candlestick patterns are known as the three white soldiers and the three black crows. Now you may be wondering, why white and black when the candles are green and red? Please note that on some charting platforms, green candles are displayed as white candles and red candles are displayed as black candles. So you can think of it like this: the three green soldiers and the three red crows. Now that that's out of the way, the three white soldiers or three green soldiers pattern is an indication of a reversal upwards. The three white soldiers follows a move downwards and is identified by three consecutive green large candles. The three black crows, on the other hand, follow a run upwards, indicating a direction change downwards. Three black crows are identified by three consecutive large red candles. The last two candlestick patterns are known as the bullish engulfing and bearish engulfing patterns. Finally, names that are simple and make sense. Let's talk about the bullish engulfing pattern first. The bullish engulfing pattern is quite literally a bullish pattern. It typically follows a move downwards and indicates a reversal upwards. But how do you identify the bullish engulfing? Well, it's quite simple. Following the run down, identify a small red candle followed by a larger green candle that is engulfing that red candle. The bearish engulfing, on the other hand, follows a run up and is quite literally a bearish indicator. How do you identify a bearish engulfing pattern? Following a run up, find a small green candle followed by a larger red candle that is engulfing the green candle, and that would be your bearish engulfing pattern. I would like for you to take the time to go over all of these patterns and find charts to practice on. Once you have done that, you will be a lot more experienced in identifying these patterns. And that concludes this lesson.